Welcome to tonight's episode of Beyond Focus TV. I'm Lydia Patel, and as always, I have a very special guest for you, Terrie Chantel, who's the owner of Gold Star Credit Repair and Blue Tax Services. She'll be with us for the next 30 minutes, so stay with us. You're watching Beyond Focus TV.
Beyond Focus TV allows you to discuss contemporary topics affecting the Caribbean people on both a national and local level. The show features informed guests who offer insight, debate, and evaluate various issues. Beyond Focus TV builds on the station's mission to provide useful information to the Caribbean people in New York and abroad. Beyond Focus TV, where our viewing audience can get educated, informed, and empowered.
Welcome back. You're watching Beyond Focus TV. I'm Lydia Patel, and as always, I have a very special guest for you. Terrie Chantel is in the house tonight. Of course, it's great to have you here.
Hi, great to be here. Thank you for having me.
Well, it's lovely to have someone who's on the move. Actually, give everyone a little bit of the background. You actually flew in for a conference.
Yes.
This is dedication, and we love women on the move doing their thing. So you flew in for a conference today.
Yes.
Give us a little brief about your day before making it here to Beyond Focus.
Well, I had a conference today over in the Williamsburg area for taxes and credit. And so we educated our great attendees on how to save on their tax season through a tax write-off boot camp, basically letting them know everything there is to know that they could qualify for so that they're prepared when they walk into their tax preparer's office. And then we also educated them on credit, how to improve their credit, how to maintain their credit, and how to rebound from bad credit. So it's very exciting.
You know what? I think you just gave us a synopsis of what we'll be talking about in the next 30 minutes, which is fantastic.
Yes.
So let's talk about how you actually got into the business and why you got into it.
Sure. Well, I have an IT background, and I always wanted something where I could help people. So I knew very early on in my career that I wanted to do something else, but something that leveraged my skill set. So I got into the tax business via searching myself and figuring out, what is it that I can do to help people. And I loved it because I was helping so many people that were getting scammed or they weren't getting the write-offs that they really qualified for. And so I really enjoyed that. And then just with that, when you're talking to people during that tax consultation, you're in their personal lives, and often credit will come up constantly. And so throughout the years, I would repair people's credit, help them fix their credit, and then that turned into a business as well.
That's fantastic, and a lot of people, including myself, could actually benefit from that. And I think that's the one thing by the end of the program everybody at home could go home with is that's a wealth of information. Credit is so important. Actually, it's the one thing you have in this country. If you have good credit.
Yes, exactly. Cash is king, but credit is power. That's what I like to say.
Oh, I like that. Cash is king, but credit is power.
Yes.
Okay, I think I'll give you some royalties on that one because I'm going to be using that because that's definitely something to think about.
It is.
And you see so many different things. So let's actually talk about that. What are some of the key factors? Because you hear about Equifax, you hear about Transunion.
Mm-hmm.
So those are kind of the two key players when you're looking at getting your credit score.
Yes. So the first thing I would say that a lot of people need to know is you actually have 3 credit scores: Equifax, Experian, and Transunion. And it's important that you look at all 3 of those because your score could be different because everyone doesn't report to all 3 of the bureaus. So that is why you have 3 different scores. Your score is based on what that particular bureau has reported for you. Mm-hmm. So it's very important. So you may look at one credit report and see that, oh, this one looks fine, but then you pull up Equifax and you see that you have 5 collections on there that you had no idea that you knew about. So that's the first thing, is to pull your credit. You can get a free one every year from annualcreditreport.com. It's the only federal source. By law, they are supposed to give you a free report, and you need to investigate it. That's the first thing, is look at your credit report and see what's on there, and look at all 3.
So when you actually pull a report, and let's take it down to the basics for those who don't know how to read a credit report, and they're just focused on the number. How do you read a credit report?
Oh, that's a very, very good question. So the first thing, you have a credit score and you have a credit report. Those are really 2 different things. In my industry, I like to focus on the health of your credit report because you can very well have a high credit score in the 700s and still get denied for a home. People don't realize that.
Really?
Yes, because what lenders do, I like to say that your credit is your financial personality on paper. And so what that is, how well do you borrow and pay money back? And so when you're doing something like purchasing a house, they want to see maybe revolving credit. They want to see some good spending habits. And if you have a credit score, but you haven't really recorded a lot of payment history that's really valuable and that proves that you are a responsible person, then regardless of your score, you can get denied for some things. And so you need to pay attention to your score and your credit report. But once you want to read your credit report, you basically want to look at, I would say, 3 categories.
Okay.
You look at your open accounts, and you investigate to make sure that all of those belong to you. Then you want to also look at your collections to see if there's anything on there that needs to either be disputed or come off or rectified, resolved. There's different strategies, but the reason why you want to pay attention to that portion on your credit report is because it weighs your credit down heavily to have those collections on there.
Is that visible on the form?
Yes. So the way a credit report looks, it has what we call maybe a trade line or an account. And for that one account, let's say that you had an account with Verizon, for example, or let's use a credit card, Visa. It's going to show the name of the creditor, the company that you're with, the limit, the current balance for that month, and it's also going to show a 24-month payment history on there, and that is where your payment history is worth 35% of your score. So it's going to say every single month if you've paid on time, or 30 days, or 60 days, or 90 days. So those are the key factors that are on a credit report, and you will look at that account by account by account to investigate how it's reporting on your credit report.
So let's say somebody wants to boost their credit, because I usually send questions out to people when we're going to have a guest on. One common question that came up is, how do I boost my credit score? I pay on time, I keep that 30% balance that they tell you, but it's been hovering in the same amount for X amount of years.
Well, the first thing I would say is you need to understand all of the factors that affect your credit report. So it's payment history, it's your utilization, it's your mix of credit. There's 5 things, and so you need to really, it's per person. You may, for example, have one credit card on there and it's only been open for 2 years. That may explain, you may have a short credit history. You may think that everything you're doing is reporting to your credit report, but it's not. And so you first need to understand what's reporting to your credit report. And then you need to understand how long have you had credit, and you also need to understand if there's maybe some lingering things. Maybe there's a reason why your credit report isn't getting where you want it to be. So I would say the first thing you need to do is understand how the scoring system works. And typically, some people, if they're monitoring all 3 of their credit reports, but maybe they're just looking at one. If they're just monitoring all 3, then they'll have a good picture. But maybe they're just looking at one report and they're not realizing that that one credit card is only reporting to one of the bureaus, and that's why your other score isn't going anywhere. So it's definitely a lot of education around it, but definitely paying on time, keeping that utilization low, and then having a good mix of credit. That's also one of the factors. That's 10% of your credit score. So revolving, which is like credit cards, anything with a varying minimum payment, installment loans, that's car loans or, small loans like that. And then, of course, mortgages and things like that. That's your mix of credit. And so that factors in as well.
All right, great. This has been so awesome. We'll take a quick break. We'll be
Okay.
right back. You're watching Beyond Focus TV. Stay with us. back. You're watching Beyond Focus TV. I'm Lydia Patel, sitting here with Terrie Chantel, owner of Gold Star Credit Repair. So, Terrie, we love it. Great, great first segment.
Thank you.
Very informative. And, of course, this is the best time to have you on. It is tax season.
Yes, exactly.
Across America. So, not just in New York. It's tax season.
It's
Wherever you
tax
go, you can't
season.
run from it. So, actually, give us some tips, because a lot of times right now, people are looking for credit. What you mentioned something important about the seminar today.
Mm-hmm.
You're trying to get people prepared for when they go to see their accountant or their tax preparer. They know.
Yes.
Instead of kind of asking what they can get, they kind of know what they're entitled to.
Exactly.
Which I think is very different, because a lot of us go in there and we don't know what we're expecting. We're just kind of hoping that the universe aligns to get us something good. But we may not be. There are certain things that you may definitely be entitled to.
Exactly.
So let's talk about that.
Right. So the number one thing I would say is educate yourself. Okay. So all of my clients and everyone at the seminar today, I gave them a tax preparer checklist of 50 things they may be able to qualify.
50?
Yes. It was my tax
I'm gonna
write-off
need
boot
one.
camp. Yes, I'll send you one. Yes, and a lot of people don't realize some of the things that they are eligible to write off. In particular, I would say the number one thing that I see people kind of shy away from is if they are indeed self-employed. They don't realize that if you have a certain activity that you do for profit, you are a business in the eyes of the IRS, and that may be an advantage for you. And people automatically think that I want to, it's scary, or a business means I'm actually incorporated and I have an LLC, but that's not what a business is according to the IRS. And so the number one thing I try to ask people is about their lifestyle outside of their job, to see if there may be some write-offs that we can take advantage of, because that opens the door to a lot of things. And so my first thing is, don't be scared, but really investigate everything in your life. The second thing is, make sure you choose someone that's going to prompt you, that's going to drill you, that's going to ask you a lot of questions, because if you don't know what to ask, you at least want to go to someone that's going to ask those questions for you. So, but the ownership is on ourselves at the end of the day to educate ourselves, which is why I give a lot of free information. I do a lot of live videos on different topics, explaining what the difference is between itemizing and standard deductions. I did a whole live video on Facebook where I filled out a W-4 for everyone, and thousands of people watched it, because they think that it's so confusing and it's so complex, and it's not. And so I try to give that information to the people that watch me, so that they can walk into their tax preparer's office prepared as best as possible.
So it is possible to still have a W-4, have a regular job.
Yes.
And still have a 1099?
Yes. Oh, definitely.
So you could bring both of those to your accountant.
Definitely.
And that won't complicate anything.
That won't complicate anything at all. And I had a young man in my seminar today, and at the beginning, he was asking questions, and he bought a lot of equipment. He invested in a music business. I think maybe he was trying to be a producer or some of that. And so he had just spent a lot of money. And as we know, as most business owners know, the first year you may take a loss. You may not really get that money that you invested in. And he bought all this equipment, I think in October or September, and he's trying to start a studio. And so he didn't know that he actually still should claim that on his taxes. He didn't really profit, and so he's claiming a loss. Those are business expenses, everything that he bought, every piece of equipment, and that's actually going to help him. It would hurt him not to file that business. And he was very surprised and didn't realize that he was still considered a business.
So would he have to file business taxes?
When you file self-employed, it's actually a part of your personal tax return. It's on what we call a Schedule C. So it is the business portion of your personal tax return. Okay. It's still your personal income. It gets lumped in with your day job income if that's what you have. But the key is for him, for a first year business owner, because he invested in his business right towards the end of the year, he spent, I think I want to say, close to $7,000 in equipment. He financed some of it, but it's still a cost. He would be able to probably claim a loss of maybe $5,000 or more, depending on how much money he made. So what that means is if at his day job he made $50,000, but he claimed a $5,000 loss, he's only going to get taxed on $45,000. That's more money in his pocket.
Absolutely.
Yes.
And that's
Yes.
truly amazing. And this is, I hope everyone's taking notes on this. So when it's time to go see your tax preparer, you'll be like, okay. And of course, having children.
Yes, definitely. Having children gets you exemptions, just some of those standard deductions and exemptions, which basically means that the government